Welcome to Chapter 3. In this chapter we talk about process costing, which is the second major product cost system used in manufacturing entities. If you notice in slide 6, we're going to talk about examples. We mentioned it in Chapter 2, but here you can see high volume, mass production items. It's pretty impossible to trace accurately the cost directly to each screw or to each paper clip, but we do know that we're going to accumulate costs as we make a batch of paper clips, and then we could assign it that way. So if you look at slide 7, we'll see the differences in the two side by side. This would be an important slide for you to keep as you determine which one of the costing systems in your business you need to apply. In a job order system, again, it's custom orders versus repetitive mass production. It's low production volume as opposed to high volume. It's a high degree of product flexibility and customization. For example, an automobile. It's pretty hard to find two vehicles on the road today that are identical. They may have the same color paint, but once you get inside and you look at all of the different option packages that are available, it's pretty difficult to find two that are exactly identical. So we need high product flexibility with a job order system. In a process system, pretty much a gallon of milk is a gallon of milk. So whether it's a gallon of milk at Albertsons or a gallon of milk at another grocery store, a gallon of milk at the end of the day is still a gallon of milk. So if we look at slide 8, both systems, even though they're different, have one goal in mind, and that goal is to determine accurately our product cost so that we can then set our prices to ensure the long-term profitability of our company. If we look at slide 10, the differences then come about because job costs are transferred to finished goods as each item is finished. So each automobile is finished. We've traced all of the costs associated with that automobile without any difficulties. In the process costs, what we have to do is we have to come up with an intermediate step, and that is a cost per equivalent unit, because we will have products in the pipeline that are not quite finished. So one of the key differences between the two is we have to develop the equivalent units. And what do I mean by that? Let's assume, if you look at slide 11, you notice that we have 1/2 pitcher of water. We have 2 of those. Well, we could either say we have 2 half cups of pitcher, or we have 1 equivalent full pitcher. This is all we're doing when we establish our equivalent units of production. It's a concept that's based on the number of partially completed units, and we convert those into a numerical equivalent units of production. So if we look at the cost calculation, how do we get our cost per equivalent unit? We take our total product cost for the period, that becomes the numerator, and then we look at our denominator, which is the equivalent units for the period. Now, one thing to remember is that our equivalent units of production are going to go back to the product cost. So we will have an equivalent unit of production each for direct material, direct labor, and manufacturing overhead. So now we're going to look at the steps, and if we start with step 1 at slide 17, here we have the 4 steps laid out for us. We're going to determine first the physical flow of units. Second, we're going to compute our equivalent units of production. Third, we're going to compute our cost per equivalent unit. And then fourth, we're going to assign and reconcile our costs. So if we look ahead then to slide 18, the first is we're going to calculate the physical flow. And in this hypothetical example, we had this company, Gen X. It had a beginning inventory of 30,000 units. We started 90,000 during April, so therefore we have 120,000 units. You notice that we completed 100,000 during the period. We had 20,000 at the end of the period, and therefore we have our 120,000 units. So we had 120,000 units to account on the start and the beginning inventory side, and now we've reconciled those with the number of units that were finished and the number of units that were unfinished and remain in ending inventory. So that's step one. If we look at slide 19, step two, now we're going to look at the direct material portion of the equivalent units. And here we have 100,000 units that were transferred out. Well, if 100,000 units are transferred out, that means they were finished, so they had to have 100% of direct material. The ending goods in process, this assumes that the material was all added at the beginning of the process, which is typical if you're a dairy farmer and you're making the milk production. You put in all the milk, all the raw milk goes in at the beginning of the process. So there again we would have 20,000 units or gallons of milk in this example. So if we look at the next slide, slide 20, now we're looking at the direct labor. And here, again, anytime a unit is completed and transferred out, you have 100,000, you have the full 100% of each unit. A unit that is complete means it is complete. 100% means completion. The ending goods in process, here are, in this example, we're assuming that we're 25% of the way through the process at the end of the period. So here we would take our ending goods in process. There's 20,000 physical units, but it's only equivalent to 5,000 finished units. Okay? If we move then to factory overhead, the calculation for factory overhead typically is parallel to direct labor because factory overhead is usually assigned on a direct labor hour basis. So typically you're going to see direct materials having different equivalent units than direct labor and factory overhead, which the two of them will tend to have similar equivalent units. So then we go to slide 22, and now we look at the actual cost calculations. And so what we do is we total up all the costs. We had the $3,300 worth of beginning direct material. We added $9,900, so we have our total cost of $13,200. We divide it by the equivalent units of production, and we get our cost per equivalent unit of 11 cents. Similarly, we look at direct labor and factory overhead, and we get similar product cost equivalent to a full unit produced. If we then move to the following slide, notice here what we're going to be doing is we're going to be reconciling the costs for 100,000 units that were transferred out and the 20,000 units remaining in the ending inventory. And if we just move to slide 24, we will see how this gets done. And you can spend the time going through that slide and making sure you understand it. But notice at the very top, we had $27,000 worth of total costs that we needed to account, and we have actually accounted for $27,060 worth of costs at the bottom of the slide. So that's an important consideration for you to make. You must account for all the dollars that you're supposed to be taking into consideration. So we've now finished this chapter on process cost summary. We've now looked at the two cost systems that we primarily use in a manufacturing environment. We've looked at the job cost, which involves, again, specific, unique items like an automobile or an airplane. That was Chapter 2, and now in Chapter 3, we've looked at process costing, which deals with high volume, typically a lot of liquids or a lot of small mass-produced items.